So today I want to talk about currency exchange rates. I want to understand why the rates are what they are. To do that, I want to understand purchasing power parity, and I want to see if purchasing power parity has any ability to predict where exchange rates are going. Now, here is a table of current exchange rates for the US dollar and other currencies around the world. It's important to understand that this is not set in stone. This changes frequently. The foreign exchange markets are the most liquid markets on the planet. In fact, we can see over the last 24 hours that there has been some change in the exchange rate. So the question is, is there a mechanism for determining what those exchange rates should be, right? Can we find that mechanism? Now, one way to do that is through something called purchasing power parity. So what we're going to do here is we're going to compare the price of an item in one country with the price of an item in another country. We're going to use that ratio of those two different price differentials to determine what that exchange rate might be. So whatever the spot rate might be. Now, let's go ahead and do that. Lots of numbers here. Feel free to pause it if you need to. What I've done here is have some countries down the first column, so different items in prices in those countries, and then the actual exchange rate in that last column. So for example, a gallon of gasoline in the United States is $2.50, a pound of beef is $5.52, internet for 1 month is $60, the price of a square foot of a property is $1.23, kind of on average in the United States, and we have average prices for the other countries in their currency. So if we do that ratio, we can determine what the spot rate should be based on that one particular item. So for example, here we do that. If we look at gas in the US at $2.50, gas in the European Union at $1.91, that would imply an exchange rate of 0.76, which is different than the actual exchange rate of 0.83, implying that the euro is kind of undervalued versus where it needs to be based on the gas price. But we can also see that if we look at the internet or property, then that appears to be undervalued. So the one point here is that you're not going to get the same answer depending on which item you use. So in general, what we're going to do is we're going to use a basket of goods to determine kind of the average purchasing power parity based off this whole basket of goods, which it would look something like this. Now, of course, the question is, will what we get as an answer for what the currency should be based on purchasing power parity, will that tell us anything about the future? And it turns out it does. Now, the actual exchange rate goes widely, deviates widely from purchasing power parity, but it does seem to kind of hug a band around there. Now it can deviate for years. Here we see examples of 5-year deviations, but it does seem to be go from undervalued to overvalued to undervalued, kind of hover around this purchasing power parity line. This is the pound. We can see a similar pattern for the Canadian dollar, but again, we go through wild swings. And we also see that it can take a long time to kind of get back to that fair value based on purchasing power parity. In Japan, it's even a little more different. Here we see maybe like a 15 to 20-year period where that pound is undervalued versus the US dollar. So it can take years and years and years. But again, we do see it kind of following the purchasing power parity trend line there. And of course, there are problems with the purchasing power parity. One would be that people, don't use the same item. So in one country, you eat a lot of rice. In one country, you eat a lot of wheat, whatever it might be. You also might find that, habits of people are different, or things are subsidized in a different way. So you might have good public transportation, you might have subsidized gas, or whatever it might be. So things are different in different countries by a number of different standards, which of course creates problems with using PPP, even though it does look like there is a relationship between actual exchange rates and purchasing power parity. That's one way of looking at how exchange rates might behave. So we're going to follow this video up with one on interest rate parity and see if we can't use interest rates to help understand, exchange rates and where exchange rates are going. Thanks so much for listening. I'm Brian Kozlowski.